Hello everyone, how's it going? Hope everyone's doing good. Hope everyone's had a good day and a good trading week so far. So today I'm just gonna pop on here and do a little quick session on imbalance, gap, fair value gap, inefficient price action, whatever you want to call it, it's all the same thing, right? Before I get started, I just want to say, in this profession industry, right, you don't really need to know everything to be consistently profitable. And you don't need to know everything about everything either, if that makes sense. Okay, so like someone might know the A to Z about imbalance, right? And that's completely fine, perfect. But what my point is, you don't need to know all of that to be able to use it. Okay, you don't need to, right? So I'm going to be just sharing what I use, how to identify it, and how we can use it to our advantage. Okay, and I'm going to show just a few chart examples. I'm going to try and wrap the video up in about 10 minutes. Right, so let's get started. All right. So imbalance, what is it? Essentially, it's just a sharp movement in price in a given direction. Okay, so let's just say we're making lower lows and lower highs, and we come in to mitigate something or grab some liquidity, and we get this rapid movement in price. Okay, at this point, more often than not, there will be imbalance left at this point. Okay, all along here. And if we're in an uptrend and we mitigate something and we get a rapid movement in price, again, we get more often than not imbalance left behind. Okay, so what exactly is this? What does it mean? Okay, all this means is, right, at this point, okay, at this point, the only thing that was happening was buying. Okay, and at this point, the only thing that was happening was selling, and therefore leaving the market inefficient. Okay, so the markets needs to be efficient. Okay, but when we get rapid movements in price, such as this and such as this, it leaves the market inefficient. Okay, so how do we identify it? Okay, so I've just drawn out these basic candlesticks, okay, using the highlighter tool. Okay, so all that imbalance is, right, okay, is the gap between this wick and the next candle's wick. Okay, so this gap in here is what we call imbalance. Okay, and just to add to that, we've got a gap in here, which is also imbalance. Okay, now this can be, a big gap, it can be a little gap, whatever it is. If there's a gap, that means it's imbalance. Okay, so how can we actually use it, okay, to our advantage, right? So let's just say price was coming down like this, mitigate something, and then we get this rapid movement up. Okay, let's say there's a wick here. This would mean there's a gap right here. Okay, now one thing we know about imbalance, okay, is imbalances will get filled. They need to get filled. Okay, do we know when it's going to get filled? No, we don't know. Okay, but that's all right. Okay, we know that it's going to get filled. Okay, what does this mean? This means we can use it as target levels. Okay, so let's say price is here. Okay, oh, let's say price is here, and we have a lower time frame entry. This means we can target from here. This could be our target one, this imbalance fill. Okay, this could be our target two, because we know that imbalances need to get filled. Okay, so it's logical for price to come back, retrace back into these levels. Okay, what else can we do? So we know that from these levels, okay, we know the price is going to come to fill these levels, okay, at some point. This means from these levels, we can look to frame entries. We can look to continue buying from either here or the extreme. Okay, and that's literally how I use imbalance. Okay, I use them as targets, I identify it from wick to wick, and I use it as targets and entries. Okay, now another thing I just want to quickly mention with imbalance is a lot of people that I trade with tend to use the 50% of the imbalance. Okay, because sometimes what you find is the whole of the imbalance will not get filled. Okay, the 50%, so this black line in the middle, this will get filled. So we can target, specific target, the 50% of the imbalance, or we can look to frame entries from the 50% of the imbalance. Okay, and that's literally as hard as you got to make imbalance. Okay, identify it. Okay, then use it as targets, use it as entries. Okay, now let's quickly jump on to some chart examples. Okay, so I've highlighted 3 examples here. Okay, so the first example, right, we have, prices making higher highs and higher lows, higher highs, and then we have this rapid movement in price, this rapid leg down. Okay, now this to the left might have mitigated a higher time frame supply zone. I don't know. Okay, we'll leave all that talk for later. We'll just focus purely on imbalance. So this rapid movement in price has left from this week to this week an imbalance, right? Let me zoom in, probably see a bit more clearer. Okay, so there's a gap. Let me draw that again between this wick and this wick. That's imbalance. Now, if you drag it to the right, look how perfectly we come back and mitigate it. Right? We come back and mitigate it. Now, notice I said we don't know when it's going to get filled. Right? So this imbalance took around, so from the low to when the imbalance got filled, 39 days. Okay, let's just say 40 days. Right? But we could start to frame buys from here, okay, understanding, different logic about the market and targeting these imbalance levels. And from here, if your criteria meets, you can start to sell, okay? Now, I've got this here, right? So let me just go on to replay mode, right? So at this point, just one more. What we have is a rapid movement in price, okay? And we have imbalance from here to the next week up. Okay, then what happens? If I just keep playing price, we come back to mitigate it, right? So you can frame, your buy entries from here if you want, if it meets your criteria. Okay, then we come back to mitigate it again, and look at this time. Look at what happens this time. We mitigate the 50% of it exactly. We mitigate literally the 50% of it. Okay, so the 50%, using the 50% of the imbalance, right, is a very powerful tool. Okay, then we go on to break structure. We fill this imbalance, and now I think if I'm right, we come back to mitigate the whole of the imbalance, right? So from here, we can look to frame buys. Now, this might just look like a little movement, but this is the daily time frame, so this is a good 115 pip move, right? So with that, that's more than enough to catch like a 1 to 10, 1 to 20. Okay, so if your entry criteria meets, all your checkpoints are ticked off, you can definitely take this buy. Okay, now the last example I've got is again just to show you, price probably mitigated something to the left. We left this from this wick to this wick. We left that imbalance, and again, notice the whole of it is not filled. Okay, we take our 50% tool. You can see the 50% has been filled, and then price went on to make a new high. Okay, now using imbalance by itself is probably not a good trading strategy. Okay, so for example, with this, okay, in its simplest form, all price did probably mitigate to the left. Okay, let's say there's some sort of order block here, okay, to the left, mitigated it. Okay, then we broke structure, showing us intention. We left imbalance. Okay, we came back down, we created equal lows. Okay, so we formed liquidity right above imbalance. We then come back down, take out all these early buyers, fill 50% of the imbalance, and then we go. Okay, so at this point, if your entry criteria meets, by all means take the trade, because you've built a story. We've mitigated a higher time frame point of interest. We broke structure. We came down. We created liquidity. We took the early buyers out, filled the 50% of the imbalance. If the entry criteria meets, take the trade. Okay, so bear in mind, like I said, I just wanted to make it very clear and very easy on how to identify and use imbalances. Okay, use it as targets, use it as entries. Okay, use the 50% of the imbalance, right? But do not go ahead and, it's not as simple as, okay, the imbalance just got touched, I need to buy, I need to sell. No. Okay, you need to build your story. Okay, it's not as simple as, literally finding an imbalance and then setting your entry limit there. Okay, build a story. Okay, get used to identifying imbalances. Okay, what's a valid, what would, are you going to use it with, like an order block? Are you going to use it with, some sort of supply and demand concept? Whatever it is, use the concept of imbalance with, other factors such as liquidity, etc., and it will be very powerful. Okay, it's a very powerful tool to have in your trading arsenal. Okay, so I hope that video helped. If you guys, have any questions, just let me know. Just put it down in the comments, or get me on Instagram or wherever. And if you could like this video, that would be, a big help. If you could share this, with your friends or other traders, that would also be a big help. And finally, if you can subscribe to this channel and help me grow, I will try my best to continue to post, just small videos such as these, explaining different concepts. And I hope you guys have a very good remainder of the trading week. And until next time, make sure you stick to your trading plan and trade safe.